as the financial year progressed, some of the key concerns we had with that GDP forecast sort of ebbed away. We, 6 months ago, still felt energy was going to be a drag. We felt that overall demand turnaround would be poor. Those things have turned out to be somewhat unfounded. We're looking at an economy where consumption is fairly resilient. We're looking at tax data that is buoyant. We're looking at fiscal pressures ebbing. Balance of payments pressures ebbing around low energy prices and a weaker dollar. So it's all working out pretty well for India from a position where even 6 months ago things looked a bit iffy.
Interesting. We hear that expression, resiliency and robustness, despite the global macro picture, but there's still quite a lot of dispersion over where that leaves FY25 forecasts. RBI seem confident of 6.5%, and more or less optimistic at 6.2%, and then 5.8% for FY26. Is the reality somewhere in between?
Very much so. So low sixes is where we would settle ourselves as far as the growth outlook is concerned, which is a good number considering the despondency around the global investment environment we're seeing given the tariff uncertainty. The fact that local sentiments are buoyant, independent of external noise, is very, very helpful for India. In fact, that makes India a bit differentiated from the rest of Asia, which is very trade dependent, very worried about the trade outlook. India has some worries, but at the same time seems to have a pretty domestic demand-driven momentum that's independent of that.
Can we continue to count on government capex spending and that model to keep consumption-led growth ticking around 6.5%?
It's very helpful, I have to admit, but at the same time, there is a point when the government may not have to pull the weight that much. If you have a nexus of positive domestic sentiment, along with domestic investment, both from FDI side as well as domestic capital deployment from local Indian businesses, then you could have a virtuous cycle where private sector demand can begin to outstrip the momentum that you see coming from capex. But you got to have the foundation in place. If you build it, they will come. The government in India is very committed to building it. And then you got to be a bit lucky, oil price, global environment, investor sentiment. If those things align, things can turn out to be very, very good.
Isn't it a bit like waiting for Godot, though? We played that report there on where we are in terms of Make in India. Is it working insofar as it is crowding in private capex, or does it need to be reimagined? And if so, what needs to be changed in the policy?
I don't think there's a crisis that requires reimagining the model. I mean, the model would be perhaps benefiting from a little bit of tweak here and there. What are the contours of Make in India? What are the critical technologies where India can comfortably invest and see decent returns, as opposed to going into a very crowded field, let's say AI data centers, where the whole world is sort of deploying a lot of capital. So I think those sort of pragmatic approach to where there's the biggest bang for the buck is where the central government's role come in. The private sector is doing its thing. I mean, we're seeing pretty impressive amount of capital deployment, but you still need a bit of a nudge in this world where governments are playing a very, very big role in determining the direction of flows.
And we'll get into the trade deals that are waiting in the wings and how that potentially could supercharge FDI commitments. But overall, Taimur, when you look at the Indian context at the highest level, how concerned should we be about perceptions of slowing reform momentum?
I don't think we have a set of investors out there that are very frustrated with India. Everybody would like more traction, more grease in the wheels so things move faster. But I don't think there is a huge laundry list of complaints that India is a very hard place to do business. This used to be the case. Things have improved, no question about it. There's room for improvement on business approval, on consistency of application of corporate law, for example, those areas. But they're not deal breakers.
What about land and labour reform?
Well, that's a perennial peeve, and that's there. I don't think any outside investor has Pollyannish view on India that this is just going to go away magically. So people recognize the constraint, but they find that the constraints are outweighed by the potential.
I know we're all getting whipsaw watching the headlines and the to and fro on the tariff narrative, but this recent injunction blocking Liberation Day reciprocal tariffs, does that change perhaps the balance of power at the negotiations table between India and the United States? And does this work in India's favour if 26% tariffs may not necessarily be guaranteed once that 90-day pause period elapses, which I believe is in around early July?
Yes, we're running out of time there. My expectation on that very last point would be there'll be extensions because there's just no amount of bandwidth available on the U.S. side to deal with so many countries. As far as India is concerned and whether it gets a slightly higher or stronger hand in this negotiating table because of this court decision, I don't think so. I think the U.S. president still enjoys quite a bit of power under Section 301 and 232 and other various numbers that are being thrown around. So Peter Navarro, as you showed just before in the segment, has all sorts of plans B's and C's in place. I don't think a country trying to negotiate with the U.S., unless it has a huge amount of leverage, should try to exploit that as a marginal advantage. It might actually backfire.
Taimur, how do you feel about the domestic inflation outlook? And does the recent run of data suggest that perhaps we're at a favourable inflection point, given monsoon rains have been abundant?
Yes, for once, I'll have to say yes to that question. I think that overall, we're heading into the monsoons with decently favourable inflation momentum. It's not heading upward in any meaningful manner. And if the rains, the way they're suggested by the data so far, are coming in a bit early, that'll really help inflation with respect to food prices to be stable. On the commodity side, massive tailwind is really going to anchor inflation expectation because oil at 50-60 is great news for India.
But it's short term only, isn't it? Because we know extremes of climate change are the norm for the global economy. They're not going away. India is no stranger to this. So that means clearly volatility in the inflation data set moving forward.
We should definitely not take the short-term favorable dynamic as a marker for things to come, whether it is water or it is temperature, surface temperature, and its impact on crop yield. These things are major risk for India in the medium term. Even if the U.S. chooses not to be super focused on climate change-related matters, countries like India, for them, the risks are clear, present, and they'll have to deal with it.
How would you describe the Indian consumer? Of course, India is not monolithic. There are nuances and regional differences. But is urban consumption recovering? And will rural consumption continue to be strong? Because we've seen some dispersion on that front.
Consumption is a slow-moving variable. Shocks that happened 5 years ago, 6 years ago, still play a role. They have scarring. So whether it is demonetization or the pandemic, they affected consumption in a very permanent manner. India is still sort of trying to recover the lost path of consumption from those shocks. And these are, again, 5-7-year-old shocks. Right now, things are going in the right direction. Interest rate is not a massive burden. Public sector banks have plenty of liquidity and eager to lend, and the private sector banks, same story. Capital flows are buoyant. Job creation could be better, but it's not bad. So put it all together, the outlook for consumption in the near term looks good. The long-term shocks, scarring are something to keep in mind, which is why maybe we're not in the China-style rural growth rate situation, but it's pretty good.
That's an interesting point. Job creation, let's pick up on that. Could be better, but not bad. Is India, though, sleepwalking into an employment crisis? And are we witnessing what some have said is a dramatic decoupling off, on the face of it, strong GDP growth, but very little in the way of job creation?
Right, the famous jobless growth argument that capital becomes more and more efficient and productive at the expense of labor. So companies make a lot of money, but it doesn't translate into a wage growth dynamic for the average population or good quality jobs.
Especially amongst the younger generation of job seekers.
So having looked at the experience of the West over the last 30, 40 years, I think it's a legitimate concern that as you move up the industrial value chain, companies which are embracing the best-in-class technology may become more and more capital intensive. But a country the scale of India, with a thriving service sector that we have seen, I'm not that worried about it. I know that there's always a romance associated with lifting up the population through the supply chain of manufacturing. I think India has shown it doesn't have to be the only way. Service sector can be a substantial source of job creation. So I would not sort of go back into the sort of Donald Trump romantic notion that only a blue-collar job is the way out for the somewhat not highly educated Indians. There are other ways of doing it. Indian service sector could be also a panacea.